Welcome everybody to this economic update. I'm here with the wonderful Warren Hogan, who is our in-house Chief Economic Advisor, who's kindly dialed in to give us a bit of an update on the latest RBA decision and how it impacts business owners. Warren, thanks for joining us today.
Yeah, thanks for having me on, Simon. It's good to talk early in the new year.
Yeah, absolutely. So, first decision for the year, obviously it was to keep the rates on hold. What are you seeing at the moment? What's driving the decision and where do you see things going?
Yeah, well, it's the first we've heard from the RBA for a few months. They take a break over summer like the rest of us, and it was a good opportunity for them to come out and sort of set the record straight. There'd been a lot of talk about rate cuts that had sort of burbled away over the summer. Overseas, there's been more and more of that talk as well. We seem to be going that way. But they've come out pretty clearly and said, look, we're on hold. We think we're going to remain on hold. And I think what really shocked a lot of people was the fact they said there could be another rate hike in the near future, which I think, given how much people were focused on rate cuts, was the real surprise. But really what they're trying to do there is just let people know that they're probably not going to be thinking about rate cuts for a while yet. I don't think they're serious about rate hikes. I mean, they're obviously prepared to do it if they feel they have to, but there's nothing in the detail, in their forecast, in the press conference that Governor Bullock gave that suggests they're anywhere near doing a rate hike. So I think the message coming from yesterday, this week, from the RBA is essentially rates are going to stay where they are for most of the year.
Yeah, interesting. Don't want to try to pin you down too much, but do you think, if they were to start cutting, you're talking second half of the year, and is it likely to be, are you likely to see any sort of strong movements, or are we too far out to make that kind of prediction?
Yeah, look, my view on this, and I think it's in line with what they're thinking, and a lot of other economists, to be fair, is that they're going to wait till probably, November. That long. They really need to be comfortable that inflation's going all the way back to their target. That's actually 2.5, the middle of the 2 to 3% band. The latest reading was 4.1. It's come down in a year from almost 8. So it looks like we're heading there, but it's going to be tougher to get it from 4 to 2.5. So I think it will take a bit of time for them to get that comfort level. And the other message I think at this stage of the game is, if we pull this off without a recession, if we get rid of inflation in an economy without a recession, it hasn't been done before, is the reality. And of course, that means that we're going to move to a recovery phase pretty quickly. So I think the rate cut sort of cycle will be quite limited. We're talking about maybe 100 basis points. Certainly not going back anywhere to near where we were in the pandemic. That sort of zero rate world was not a good world. None of us want to go back there. So I think we're going to see a very modest easing cycle, probably starting later this year and lasting through till the middle of 2025.
Yeah, that's really, really interesting. And I guess sort of generally speaking, I mean, what are you seeing in terms of the general outlook for businesses, in the next sort of quarter or two?
Well, I think the theme is uneven. So what industry you're in matters, what sort of state your business is in matters. We're seeing insolvency rise, and it's not just construction, it's a broad sort of trend, and that's because businesses that are weak are starting to feel the pressure, and that pressure is coming from the cost pressures. They're not going away quickly, but the ability of business to pass on those cost pressures is becoming harder in a slowing economy. If you're facing the consumer, that's a much tougher gig than if you're in B2B or tech or something like, well, even construction, even though they've got their challenges, the activity levels are still there. So I think uneven is the word. And the other word is, this is the tough part. This is where the cost pressures remain, whether it's labor costs, whether it's some input costs, whether it's the fact your insurance has gone up. This is what an inflationary world looks like. But your ability to pass that on is getting trickier and trickier. So look, I think for the business community, overall is in good position. I don't think we've seen a better, aggregate business balance sheets than we're sitting here in our economy right now. But there is stress at the margins, and some industries are doing it tougher than others.
Yeah, that's great feedback. If there was one or two things, I mean, I know we've spoken before about some of the bigger, more structural sort of issues around the economy. Labour shortages as sort of seem to be a common theme here. Are there a couple of areas like that, for example, that you think business owners should be focusing on over the next 6 to 12 months?
Yeah, so labour shortages are front and centre. They're the number one issue. And look, I think it's a little bit more refined. It's skills shortages. Look, it's general labour shortages still for sure. One thing we're picking up is the surge in immigration last year. That hasn't actually really moved the dial on the industries you thought it would. There's still a lot of vacancies in hospitality and retail. Those industries that would have benefited from the big inflow of students and backpackers, they're still struggling to find labour as well. So, look, I think this is going to remain, but it's skills. And that tells me that now more than ever, it's about managing your workforce, looking after your staff, making sure you've got all the right sort of settings there for people. But of course, looking for ways to save on labour. What processes can you do? How can you innovate? What technologies out there? Whether you're in the service industry or whether you're in manufacturing or construction, there is going to always be there's going to be a reward for saving on labour, because the message I would give, these labour shortages, they're the new normal. This isn't just because the borders were closed. It isn't just because the economy is strong. They aren't going to go away. It is the baby boomers retiring. It is the fact that there are a declining amount of workers in our community compared to the whole size of the community. So look, in Australia, we've got the immigration, which is a bit of an offset, but that's not easy for all businesses to sort of simply access that. But look, if there is a route to getting skills from overseas, use it, because I think that's getting easier and easier in terms of the admin and the red tape around that.
Yeah, and I guess that's, both immigration as well as offshoring. And, I think if nothing else through the pandemic, we've all learned to work virtually a lot more effectively. So you mentioned the overseas market. I mean, do you have a bit of a view? I mean, I imagine a lot of our listeners here will be either trading internationally or potentially looking to in the future. I mean, do you have a sort of broader view on the international scene at the moment?
Yeah, well, look, I think we always look to America to lead the way on the global economy. And the run of data we've seen around that economy is actually really good. Their inflation's coming down, which is great. They're well ahead of us. Their inflation's sort of under 4 and looking like heading to 3. And that's why there's all this talk of rate cuts over there. But their actual economy has slowed down last year, but actually doesn't seem to be slowing any further. They had record levels of payrolls growth in January. And that's their employment numbers. So I think the story of resilience in the US continues. And I think the other thing to sort of on the other side of the equation is liquidity is still good. Banks are generally lending. Sure, there's some question marks on commercial property in the US and some of the smaller banks. I think that's a US specific problem. But around the world, there's still money out there looking for a home. There's still a lot of savings, whether you're looking at it in your traditional sort of bank capital or non-bank capital, family offices. There is liquidity. So, I think it's actually still a pretty good business environment. Obviously tougher than it has been in some respects. But I don't see the doom and gloom scenario. It's certainly not the recessionary scenario. And, opportunities abound.
Look, and that's great news, I think, for all business owners listening. And it certainly coincides with what we're seeing in the private equity space. There certainly seems to be a lot of capital out there still looking for that home you mentioned. I think through the last 12 months, we've certainly seen a little bit of conservatism creep in, and people, still had money to invest, but were perhaps a little bit more cautious about where they placed it. But hopefully with some of this good news coming down the line, we'll see a good flow through this current year.
Yeah, no, and I'll just add to that, risk appetite really sort of tightened up a bit about 12, 18 months ago as rates started going up. And there was a noticeable effect in the market. Equities had a tough time of it. People got a bit more cautious around tech and so forth. But I see that risk appetite is loosening up a bit. And, there's a lot of expensive assets out there in the sense that equities are on their record highs. Look at residential property here in Australia. I mean, even in commercial properties doing pretty well still. So, look, I think that good opportunity, investors will look at good opportunities for sure.
That's brilliant. Well, look, Warren, thanks so much for the quick update. We appreciate it. I know all of our listeners are always keen to hear what you've got to say about these key things. And for those listening, join us again at the end of March. We're doing the State of the Market update, where Warren will be joining us again and doing a bit more of a deeper dive on some of the key issues that are impacting you in your business. So, Warren, thanks again for joining us.
Thanks, Simon. All the best, everyone.